Now, a supply or demand zone is not just going to be one candle. Okay, so let's start at the top here. Notice this red candle. Let's assume that's going to be that's a supply zone, right? So what we want to identify is this move right here. The bigger this move is and the stronger this move is, right, does two things for us. Gives us two key pieces of information. It makes this supply zone very high probability, and obviously also tells us we have a very, very big profit margin. So as you can see, poor, good, and best, the stronger the move away from an area and the farther price moves away from that level, right, the larger the profit zone and the higher the probability of a successful trade. So we want to see a big, strong move away, and we want to see price move far. The less that happens, the lower the reward and the lower the probability. Here's a trade that I took just the other day. I just took a screenshot of it, and I want to show it to you. Now, again, you may, and I think this is a good example because if you look at the supply and demand zones on this trade, yeah, they're probably pretty obvious to you, but when you look at all these other levels, all of a sudden you say, wait a second, these supply and demand zones look like that, and look like this one, and look like this one, and look like this one. What's the difference? Well, watch that move away from the level. So in other words, what alerted me to this trading opportunity, first and foremost, and this is important, is not, this was a short, so I shorted up here. So what alerted me to this opportunity was not this, necessarily this supply zone here. It was this right here, this move, okay? This strong drop in price is what caught my eye first. And when I'm doing the supply and demand grid in the mastermind community or sessions with you, I want to make sure you understand, because I don't know that I've explained it good enough. I'm not first and foremost looking for a box or a level, or a square. My eye is first looking for a strong move in a market. And then we go to the origin of that strong move, and that's where we then find the structure, the level. Okay. So once we saw a big move away from price here, away from this area here, I then say, okay, well, we've got supply up here at the origin of this drop, and the nearest fresh demand zone below current price was not till down here. This was not a fresh level. That wouldn't be a level anyway. Notice the big tail on this one. Way too much trading here, and we've been back here a number of times. So this was the fresh demand zone. Make sense? Let's move on. This is an even better example to look at. So here we had a demand zone in one of our XLT sessions. We're looking at a demand zone here in the QQQ. Jake, we'll take a look at that. Okay. So here we had a level we're looking at this one right here. So this is a screenshot of one of our live trading sessions. And in the class, not the preview, we'll actually be doing this. So if I had a single dollar, even a quarter for every time I built a box on PowerPoint, I would have a lot of quarters. Anyway, we had a demand zone here in our recent trading session, right? Tiny little demand zone in the NASDAQ. That level was right here. And I like this example for this reason. So look at the level itself, right? That yellow shaded area. I mean, does it look easy to identify that area? I mean, does your eye go right to levels like that? Probably not, right? No. But what you need to be alerted to first is this strong move in price here. See this big rally? When you see this big rally, go down to the origin of the rally. So 3-step process. Here it comes. Look for the strong move in price first, either up or down. Then go to the origin of that move, which is down here. So now we see a couple little levels on top of each other down there. I don't want to put my mouse over it because you can't see it. But you see these two little kind of levels on top of each other? And then I see So once we find that, we say, okay, that's where there was quite a bit of trading activity that went on. It was in the early morning hours, right at the beginning of the market. That's when banks and institutions are most active. Then step 3, put your demand zone in. Identify your demand zone. So the reason why the box or the demand zone was down here, because it looks like there's really no trading down there, right? Does everybody see that? How in that yellow shaded area, there's really not much trading, right? So what does that picture represent? What does it mean? Well, think about it. This happens to be the QQQ, just like the euro this morning. And I'll go back. We'll end with that euro. No, we don't want to retest. That's a key odds enhancer. I see your question there. So in a market, now this market is one of the highest volume, if not the highest volume market traded in the entire world, right? The entire planet. So while all this trading is going on up here in the 8680 range, okay, while all this trading is going on in the one of the highest volume markets in the world, just below, not one single transaction can take place. How is it possible that while all this trading is going on right here where I'm pointing, just below that, not one single trade is taking place? How is that possible? What's the reason for that? It's because there's a massive amount of demand down there. There's so much demand, you don't even get any trades. Make sense? Okay? You need to understand what that picture represents. It's key. Knowing that information, who in their right mind is going to place a sell order down there? Okay? So we were able to just buy there and get a profit target at the blue line, not because of this pivot low, but because we want to get out before you hit this 8720 supply up here. Now, we'll continue on the PowerPoint in a minute, but I want to go to the Euro trade. And actually have this on a 10-minute chart over here. So let's do that. Blow it up a little bit. So let me get rid of this. So again, step 1, this is this morning's trade, and I see some of you took that. Nice job. Right, exactly. So, and again, all this stuff that we're getting into, believe me, we can take it deeper, and we will in that class. So, that's why I've been wanting to have hold a class like that. It's not just a class; it's a multi-part lesson series followed by multi-part, live trading application sessions. Because I want to be able to take this stuff deeper with you folks, and I feel bad that we never had the time to do it. Not to mention, there's always new people with us, so it's not fair to them either. We need to get everybody up to speed. We'll do it. Don't worry. It's coming up. We made it happen. Anyway, let's keep going. So again, step 1, alerted me and obviously some of you hopefully to this trade this morning was this strong move in price, step 1. Step 2, go to the origin of the move, which is down here. So now we see again, we're in a market that is very high volume. Euro against US dollar, one of the highest volume markets in the world, right? So we see all this trading taking place here and here. Now here we have a little bit of basing. Price rallies away, comes all the way back down here. So there can't be any demand up here. Does everybody understand that? Does everybody see how when price comes down, it goes right through this area? But can you understand why that's not a demand area? Price's basing goes up, comes all the way back down to here. So the fact that price came down to here tells us there can't be any significant demand up here anymore. It's either here or lower. Okay? Yeah. That's why we expect price to go right through it like it did. That's not a demand zone. However, down here, price is basing, right? And all of a sudden moves up to this level and then takes off. So down here is where we expect the demand. Okay. Now, if you look at, let me do it, let me just put a circle in here to explain this. I really want you to get this. Right in here, let me move the box. So right in that circled area, that's where the candles are, right? So trading was able to take place in that circle. Some trading, not a ton, but some. But below that circle, right here, hardly any trading took place, right? Why is that? What's the only reason? And really be objective about it. Don't, there's one wick going down. So price did go down there very briefly and then shot up like a rocket and then nothing. So you're here for, 10, 20, 30, 40 minutes, 50 minutes in this range and hardly any trading down here. Banks are big willing buyers down there. Remember, I started on the bank and institution side of the business. So it's not like I'm certainly no smarter than anybody else. This is how I was trained, and then I trained my eye to see this on a price chart. It's not that complicated if you know what you're looking for. So the reason why you have no trading is because there's so much demand. Banks are big willing buyers, so much demand that you don't even, obviously again, don't get any trading. Okay. So therefore, when price came back to this level, we were looking to buy in here for a move back up to here because again, you've got demand down there, and based on that, as price moved down into the demand zone here, there was nothing to stop it from moving back up to here. Make sense? So that was a trade I took this morning. I see some of you took it too.